You're here. Today, you're going to enjoy our young guest. This guy's 31 years old and already involved in $100 million worth of multifamily properties. Now, he brings money to deals rather than operates the deals, and we're going to dig into how he does that. Lennon Lee is his name, and he's with BLD Capital Group. Lennon, welcome to the show, my friend.
Hi, Rod. Nice to be here. Thank you for having me.
Absolutely. No, very appreciative of your time. And so let's go back to how you got into the business. You started to tell me before we started recording. So tell my listeners how you got into the business and how you got to where you are now.
Definitely, for sure. I actually started in real estate in 2009 when my family and I came to this country. I actually moved in 2010 to the United States from Venezuela. But in 2009, we had bought a few condos. And then in 2010, we bought a single family home. So we built this small portfolio of single family. And I was managing those for, I would say, 6-7 years until 2015.
In Miami?
In Miami, yeah, everything in Miami. And that's when I actually started looking into other avenues to move that capital, because it wasn't making sense anymore where it was parked in those houses. So I started looking into multifamily, and then I started studying, reading books, podcasts, the whole thing. And I found out about this syndications, and I started partnering up with these guys as a passive investor.
Partnering up with operators, people
yes.
Syndicating. Okay, and you came in as a passive investor.
Yes, sir.
Okay. And then how did it progress into where you are now?
Well, actually, I started as a limited partner in a multifamily syndication, and people in my network started to know. I started to talk to people, my friends and family, about what I was doing, and they got interested. And as that interest grew, also my relationship with the operators started growing. And I started building partnerships with them where I could not only invest as a limited partner on future deals, but also participate on the general partnership with them by bringing value to the table in the form of equity from my investors.
Okay. Yeah. So those of you that are brand new, obviously, in any syndication, there's a general partnership group, and then there's the limited partners that invest in the syndication. And so, most first-time operators, they'll find a sponsor to help them on the general partnership side, because there are three requirements that the bank will look at, or your source of debt will look at, and those are experience, net worth equal to the loan amount, and liquidity, 10% of the loan amount in post-closing liquidity after you close. And what's amazing about this business is that you can satisfy those requirements with one person. So you started as a limited partner, as an investor in someone else's syndication, then you saw the writing on the wall and thought, if I can bring money to deals, I'll get in as a GP, as on the GP side, and be able to share in the general partnership share of the deal. So let me ask you this: how did you develop relationships with? Let's drill into how you developed relationships with other investors to bring them into our operators that you developed partnerships with. Let's start with the investor side, and then we'll talk about how you develop the relationships with the operators. But let's start with investors.
Definitely. That's a great question, Rod. Actually, because those are the two main parts of my business. It's always building relationships. On one hand, it's with my investors and growing that investors network, and on the other hand, it's actually building I like to call it a curated network of operators, not only for myself to invest in, but also, like I said, to bring my investors in. So on the investor side, initially, like I said, it's been all friends and family at the beginning, people in my immediate network, center of influence, I like to call it. And as that started growing in terms of the relationship with the operator started growing, I had more deals to present. So obviously I was in more need for more investors and growing that. So the way that I've done it, it's basically focusing on adding value first and through education and talking to people about what I'm doing. Because
so like one-on-one, or did you have any sort of a group format, webinar, PowerPoint presentation, meeting?
Yes, actually, I started a meetup group about a year ago here in Miami. It's called the Multifamily Investing Club, and that's been all about. Honestly, I started the group to scratch my own itch to talk real estate at least once a month with people that were obviously more experienced than I were, and bringing industry experts to these meetups, right? So I started adding value to people like myself that actually were actively looking to do multifamily deals. So the group is not necessarily focused, or the goal of having the group or the meetups, it's not about actually sourcing investors, passive investors, but just providing value, put yourself
right.
out
But
there.
the reality is that's the byproduct of it.
Exactly.
And guys, you know, those of you listening, if you're not in my big multifamily group, there's almost 16,000 people in there now. And there are meetups that have formed all over the country. And what Lennon's talking about here is a fantastic way to, first of all, get immersed in this business. Secondly, be around people that are motivated, want the same thing. That, you know, you're immersed in it. You're learning the nomenclature. And if you're the one that sets up the meetup, you're kind of in a position of authority. You're deemed as an authority figure. And like, I'm not surprised at all that I'm sure that you've got a lot of investors based on that experience. Just, you know, adding value, educating them, adding value to them, and then, you know, a lot of people will go to those things and just decide maybe it's easier for me just to passively invest. Do you agree with me, Lennon?
Yes, definitely.
Okay.
100%. 100%.
Yeah.
That's been the goal all along, to educate people. And because my story, and I want to touch a little bit about this, because this is actually the way that I've been approaching the whole business. It's been actually trying to talk to myself in 2009. When we got here in 2009, we were looking to, you know, invest in U.S. real estate. Mm-hmm. And the only option that we had in our minds was just to buy a condo or a house and just rent it out. Like, we didn't know anything else, you know.
Right.
So the way I've been going about it in the meetups and, you know, articles that I write, the conversations that I have with people, is just about educating them and letting them know that there's options. And that's not only what we see in the TV shows of fix and flips, or like, there's a whole realm of options in real estate. So that's what I go about in the meetups and every day talk.
Sure. And anytime you add value and you give back and you help people grow, it comes back to you exponentially, as evidenced by your success in putting deals together and bringing investors, combining investors with partners. So so you educate, okay, and which is a fantastic way to do this. And guys, if you're serious about this business and you're in a town that doesn't have a multifamily meetup, you are crazy not to start your own. And get together, even if it's just 5 or 6 people to get started. I've got a bunch of coaching students. I can't even count them all that have started meetups in their towns. And that typically, you know, within a month, they're at 50, 60 people, because there's, you know, everybody wants to escape the rat race and get financial freedom. And so fantastic. I'm really glad you brought that up, because that'll hopefully inspire some of my listeners to do the same thing. So let's drill down on when. So you start a relationship, you add value to someone. How do you approach a conversation about investing? You know, how do you have a stock list of questions that you ask a potential investor? Talk about that process, how you bring an investor in, and you know, do you have a sample deal package that you show them? What's kind of the framework for bringing investors in?
Yes, definitely. So the first thing, before anything else, before I actually start asking questions, I try to focus more on listening to them and actually asking just one question, open-ended question, just to get them talking and get them knowing, get to know about them, what their goals are, what they're looking for. Because these investments, or any investment really, it's not for everyone. So
right.
I'm trying to understand, what are they looking for? Like, is this really something that I can offer to them, that I can provide value to them, or is it like I'm not doing them a good service with them? So it's all about listening. And then the questions, obviously, about structures, returns, numbers, etc., start flowing, but in the other direction. So they start asking the questions. That's the way I like to approach it.
Okay. Okay. Instead of a presentation, you just let it flow with questions, which frankly is the best way. No question. No doubt about it. Now,
definitely.
And guys, those of you listening, you really need to find out what an investor or a potential partner's idea of success in an investment is, because it can be completely different than what you think.
Right.
People see about people that invest in high tech and pre-IPO, and within a year or two they make 100% on their money or more, and that's not real estate. Real estate is more long term, and so you really want to make sure you're aligned with what they want. Would you agree with me, Lennon?
Definitely, 100%. I actually wanted to jump in and talk exactly about that.
Okay.
It all starts with alignment of interest, and I think that's the best way to do it, because in this industry, what we're trying to do first and foremost for our investors, and for myself, really, it's capital preservation before anything else.
Sure.
So having all the strategies in place and the structures in place to do that, and that the investors are sure that everyone's playing the same game and going after the same goals, it's what's most important. So
right. So no matter what, we don't lose the money. We don't lose the principal. That's capital preservation. And so speak to some of the things you look for to reassure an investor that you've done everything you can to preserve capital. I'd like to hear your take on that.
Definitely. Well, the way I approach it, the way we see it, and that's why I build relationships with very specific type of operators that align in vision and strategy with what I'm looking for. And in our specific deals, we try to go for what the main thing would be long-term debt. And that's something I know you always talk about, and especially this late in the cycle. That's something that we always look for. Long-term debt.
What is your definition of long-term? What's the minimum?
7 years.
Yeah, good. Fantastic. Okay. Want to make sure we're on the same page. Awesome. Okay.
Yeah.
And then
that being said, though, we have done a couple deals with some bridge lending at around 5 years.
Well, but the idea is to get out of that bridge debt and get agency debt well before the 5-year horizon.
100%, yes.
Right.
But wanted to mention that.
Okay. Yeah. So guys, those of you brand new, if you've never listened, when you find a property that is not stabilized, and there are different definitions for stabilization. The most common one for agency is 90% occupied for the last 3 months. If you find a property that's not stabilized and you want to take it down, then you get bridge financing. And it means just what it says. It's a bridge. It's a bridge between you buying that property and then getting the ultimate, non-recourse agency debt, which is the belle of the ball. And once you stabilize it, or once you reposition it, meaning, and you fix it up and you get the occupancy up. And so that's the scenario that Lennon's just talking about. Now, so tell me, so you look for great operators. We're going to talk about how you do that in a second, but talk about some of the other things that you do, that you look at in that whole capital preservation, save the principal conversation. 100%. What other sorts of things?
So the first thing, it's related to the debt, and obviously cash flowing properties that are stabilized, just because of that same reason. Mm-hmm. But then also, one of the things that we realized after studying other cycles, what happened in 2008, were two things. People were going into these deals with supposedly a business plan to do renovations or add value in some way or the other, but they were planning on doing that out of the cash flow
Oh,
of the
God, no.
property, right? So
Really glad you brought that up. Okay.
obviously, when the downturn came, occupancy was lower, then cash flow wasn't coming in. You're not able to perform on your business plan, and that's how you get into trouble. So we bring all the capital, all the capital for
all the CapEx.
Yes, for the at the moment of closing,
right,
for all the renovations and all the business plans. So we're able to, if something happens during the hold of the property, then as we still have reserve, we still have the capital there to actually deploy it or not, depending on what happens.
Right.
And then that's the second.
So guys, let me stop you there, brother. So what he's saying basically is, and I have coaching students that ask me, hey, I'm going to buy this deal and we're going to use the cash flow to do the CapEx. No, you're not going to do that. Okay. You're going to raise enough money so that you have all the CapEx raised before you close and some operating capital so that, when the market contracts, you're not the last person standing when the music stops, and you have enough money to continue, and you're not struggling to meet your business model and meet your business plan because you don't have enough cash. So great, fantastic. I'm really glad you brought that up because that doesn't come up very often on the show. 100%.
And then the third thing, it's third-party property management. And the way we see it, and I know you're an advocate for actually managing your own properties.
Let me say something. When
you're in after acquisition mode.
When you're in acquisition mode, you should not be dealing with toilets. But when you have enough of an infrastructure, enough revenue, where you can hire someone internally in that capacity, then yes, I'm a proponent for self-management. All the big operators I know all the really big operators I know self-manage. But that said, I wholeheartedly agree in partnering with third-party management. So why don't you speak to that?
Definitely, 100%. So it's very simple. At the end of the day, we are in acquisition mode. We are not these monster companies that are 10,000, 20,000 units. So just like you said, we are trying to grow. So we're trying to focus on the things that we do best, which is build partnerships, raise the equity, find the deals, put together this.
Are you involved in finding deals too?
Actually, yes and no. Just because of me being involved in the industry for this past 2 years, actually super active in the industry. I build relationship with brokers and people in the industry that send deals over. That I look at, and then I send over to my operating partner.
To an operator. Mm-hmm.
Yeah, and that if they look at it, if it makes sense, then we'll probably pursue it. But I'm not actively sourcing deals. What I'm actively sourcing is actually the best operators out there for me to start building long-term relationships.
Let's talk about that in just a second. I want to talk about how you find the best operators. And by the way, let me interject something here. I'm opening up a deal desk, and so we are going to allow any listener to submit deals to us that they think have merit, and we will review them and raise equity for them. And so I'm kind of excited about that. We're just rolling that out right now, and you just go to rodsdealdesk.com to get information, and you can, if we will partner with you on a deal, we will raise the money, we will sponsor it, you can't just send us a LoopNet listing and say, what do you think about this? There's a process you have to go through that we go through on that page. But we're going to start sourcing deals ourselves. And so we're kind of excited about that. But let's talk about how you go and find operators for you to, partner with.
Definitely. Well, to me, it was like a kind of a natural thing, just because the first operator that I partnered with was the one that I invested with as a limited partner.
Of course, that makes sense.
But the first thing that I did was actually to become a client of one of the principals of that company, which they were doing deals, and he had a consulting program or a coaching program that I became a member of. And I started working with them, obviously, to learn all the ropes of what they were doing. And eventually, just because of that relationship, we started talking about the potential of me bringing equity to the deals, just because I started mentioning the fact that, hey, listen, I have people in my network that are interested
Sure.
in jumping in.
So it just kind of organically grew. I'm basically doing the same thing. People bring deals to me. They'll be able to learn, be involved in my coaching and material. So that's a fantastic way to get started. By the way, I want to circle back to one thing we were talking about. Making sure that you're protecting, preserving capital. And one of the things that, guys, if you're evaluating a deal right now with this market the way it is, you must stress test it, meaning you must increase your vacancy factors and possibly even increase your expense ratios and see if the deal still makes sense. And I'm assuming you guys, I'm sure, do the same thing, Lennon. I'm sure you throw everything through a stress test because, when this market contracts, rents are going to contract some. And to think otherwise is naive. And so, but that doesn't mean you can't get into a safe deal and survive it. It just means, but you can't go in a deal that's too skinny.
Yeah,
Would you agree with me?
100%. That's totally true. We do all the sensitivity analysis that we have to do in terms of increasing or decreasing vacancy, just looking at those numbers. And one of the things that's actually a question I got from one investor last week was about the cap rates, like why he was
your exit cap rate.
Exactly, the reversion cap rate also, he was seeing that the cap rate on the after the in the pro forma at the exit was actually higher than what we were going in at, and it wasn't making much sense to him. He's not necessarily savvy in the whole thing, so he started wondering why. And I was explaining it's all about being conservative. Obviously, if we go out at the same cap rate that we went in or lower,
that's a win.
That's a win.
That's a win, but that's probably not reality. I mean, all things being equal, because interest rates are going up, and if you look at historically, anytime rates go up, cap rates go up. So, this is an example of a sensitivity analysis and a stress test. Your exit cap has got to be higher than where you came in at. If you're being, frankly, I wouldn't even say conservative. I'd say realistic.
Realistic, yeah. And
I'm really glad we're going into some areas that we haven't talked about a lot on the show. So this is adding a lot of value.
It's just the fact that nobody has a crystal ball. So just be realistic. And what we try to do, and we try to be as conservative as possible, and we try to go like 10 to 15 basis points per year of the hold. And that gives you a good room for
on a 5-year hold, half a point, 0.5%, or a little more than that, and that's exactly what we do, and that's a great way to do it. Okay, fantastic. So let's talk about we talked about operations. So let me ask you this. You're 31 years old, which is very impressive. $100 million portfolio. I mean, my hat's off to you, my friend. If you went back to when you were 21, what would you tell that 21-year-old self? What might you do a little differently?
Yeah, I love this question because I've been thinking about it for a while, because I've listened to that question on your podcast, and I always try to answer it every time I hear it. And every time it changes a little bit. But lately, what I've been thinking is, I'm in a position right now that I'm continuing to grow and learn and make good decisions in this investments, and I'm just thinking, well, I would just say, just be patient, just be patient. Like we try to compare ourselves, and we try in any industry really. We try to start working in something, and then we see people that are performing at the highest levels, and that they have the life that we want to have. But we just don't think enough about how much work they've put into it, like how much patience they have to get there. So just be patient. I wouldn't change anything really, because it's everything that I've done has gotten me here and in a position to be successful. So patience, it would be my advice to myself and to everyone.
That's a good one. God's delays are not God's denials. And that's a good one. And you're right. All of the setbacks, the seminars, all these things will bring you to where you are today. And that's very good advice. Now, let me ask you this. If you were going to coach someone about this business, what would you actually, scratch that question. I don't like that question. I've got a couple questions here I was planning on asking you, but let me ask you this. Have you had any seminars? Have you had any, I mean, you're fairly young, so you maybe haven't had any big ones like me, but tell me about a time you got your nose bloodied on a deal and what happened and why.
Well, actually in real estate, I've had a couple, but not big ones. I would like to share one, the biggest seminar that I've had. It wasn't in real estate, because while I was managing the portfolio for my family, I'm also an engineer. So I was working just in a day job in a corporate world. And that was my biggest seminar, because I wasn't happy. And at the same time, it was my biggest win, if you will, because I wasn't happy. My bosses were not happy as well. And understanding what you really are made for and self-awareness, that's what I got out of the whole process of not being comfortable on my day-to-day, doing the things that I didn't enjoy. And I realized that, you know what, it's just go for it. Like, and if for the young guys out there, again, patience, there's still a lot of time there to pursue the whole world, everything we want. So I think that was my main thing, being in the corporate world and being in an uncomfortable place where I was not performing the way I knew I could.
You just were unhappy.
Yes.
Okay.
Yes.
And I people hear me say on the show all the time, the life you want is on the other side of comfort. And in your case here, you're talking about really, frankly, being unhappy and unsatisfied.
Yeah.
This business, requires you to push yourself. But that said, you have to love it. And that's what you're talking about. You love what you're doing now, right?
Yes.
Yeah.
100%.
See, that's the key.
That's my passion now.
Yeah. I mean, if you find your passion, you find your love, work is play.
Yeah.
And life's too short not to do what you love. And guys, if you're not associating pleasure with multifamily real estate investing or real estate investing in general, for God's sakes, go do something else. Don't do this.
Yeah, 100%.
Right.
And I wanted to mention, along the same lines of the self-awareness, I do want to mention one deal that it was actually the first apartment that we bought here in Miami, and it got destroyed by one of the tenants. Like, this guy was crazy, and we didn't really know much about the whole thing. We didn't know who to talk to find the guy. He obviously left and left the whole place destroyed.
Right.
And, it cost us, I don't know, probably like $20,000 to put the apartment back in shape and re-rent it. But the self-awareness thing is because all the experience of being a landlord and dealing with tenants and the whole conversation with tenants, honestly, I did that for a few years and I did enjoy that. And again,
Play to your strengths.
Yes, exactly. So I started, obviously it coincided with the fact that the investments were not, were at the biggest point in the whole life cycle, and that I had to move the investment. So I said, you know what, best thing that's ever happened. I'm going to start moving into a place where I can have a third-party property management company, do the things that I enjoy doing, and grow in that space.
Thank you for sharing that, buddy, because I will tell you, guys, this relates to your whole career in this business. And, you've heard me interview many people that have teamed up to play to their own strengths. Like in your case, Lennon, I mean, you're an engineer, you're very analytical, I'm certain. And I regularly see where someone like you pairs up with someone that's an extrovert and great in sales. And you're obviously a great communicator as well. So you're kind of an anomaly, but many people have a strength and a power. And if you can maximize that strength and play to that strength, you're going to get further faster. And that's why, a lot of times, there are a lot of partnerships that get formed in this business and in any business, frankly, where people play to their strengths. Me, I'm not a numbers person. So I've got a Robert. Robert's my CFO. He's a CPA. He's done over $100 million worth of deals. I just don't love math. I mean, I love getting checks and I love making money, but I just, the detailed analysis is not me. And so, either hire for your weaknesses or partner for your weaknesses or figure out a way to align with someone else for your weaknesses and play to your strengths, and you're going to get much further faster.
100%. That's what I focus on. That's what where I feel my strengths are, and just the partnership building, whether with my investors, whether with my operating partners. And it's always about, okay, what's everyone bringing to the table? Does everyone has skin in the game? Are we aligned? Are we going and pursuing the same goals? And that's what I love about our space, is that there's too many ways to start building those relationships and participating into deals. It doesn't have to be money. Everyone brings something different to the table, and if it's real value, then the partnerships will come, and the good ones will prevail. And that's what we're all aiming for, I think.
Mm-hmm. No, couldn't agree more. Okay. What did you have to give up to get to where you are at your age? Tell me about some sacrifices maybe you had to make that you could share with some of my listeners that want what you have.
Wow, that's a good question. That's a great question. I would have to say, well, a lot of going out and the things that we as young guys enjoy a lot.
Especially in Miami.
100%. Yeah, I mean, I would have to say that's one of the things. And
you had to give up some of that, right?
Everything, like almost all of it. And
right.
And one thing that I truly enjoy with my wife, it's going out and eating, fine dining, if you want to call it that way.
Sure.
And when you're building a business, because the way I jumped full time into real estate was one of the properties that I had, I was going to invest it in multifamily, but I got a chunk of money and said, well, I'm going to live off this for a year. And in a year from now, I need to start bringing some money in, because if not, then I guess I'll have to get a job or something.
Right.
So I went all in. So I obviously, with a short budget, had to stop going out or eating out and doing some sacrifices. Well, that for us were, sacrifices. Now, obviously, I realized that they're not really a big deal, but right. We had to give up something, and that's
I get it. I remember when I had 500 units, probably about 450 houses and a couple of apartments, small apartment things. I lived in a 1-bedroom apartment.
Yeah.
I mean, I didn't have to, but I sucked it up because I was in growth mode, and yeah. So
definitely.
Okay.
The cars, the whole lifestyle. It's about sacrificing a little bit now for the long term.
I got a sign on my wall. We're videoing this, and I'll show it to you, Lennon, and anybody sees this on. But see there, focus, grind now, play later.
Love it. That's exactly it. That's exactly it. And then
that's right. That's right.
Comfort kills.
Comfort kills.
I can't move my computer because it's big, but I have here written, there's no growth in the comfort zone. So
that's right. That's right. We were just talking about that.
We were just talking about that.
The magnificent life you want is on the other side of comfort.
Definitely.
All right, my friend. Well, listen, thanks for being on the show, buddy. I enjoyed meeting you. And guys, if you want to reach him, he's at bldcapitalgroup.com, and you can check him out there. And thanks for being on the show, my friend.
Thank you for having me.
I'll look you up the next time we're down on Lincoln Road in Miami. I lived there for a couple of years. I absolutely love going down there and people watching. I'll just love it. My wife and I love going down there.
Yeah, I look forward to it, man. Yeah, thank you for.
All right, buddy. Well, take care. We'll talk again.
Talk soon. Bye-bye.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please take a minute to visit iTunes and leave your comments. For more resources or to connect with us further, please visit our website at rodcleef.com. Tune in next week for our next show.
Any investment opportunities mentioned on this podcast are limited to accredited investors Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws.